Greetings, members one and all of the Salivation Nation. This event could change everything for the gold price next week. Let's explore. I know this headline seems sensational, but I think there's more reason for it to be now than ever why we should take note for headlines such as this in this article from Kitco, especially with what the Federal Reserve has been doing and gold's status for over a year in terms of its trade and its recognition between central banks around the world. So as we look into this, keep that in perspective, because what has been going on since the financial crisis of 2008 and 2009 really should concern all of us, because much of it has not stopped. They've only ramped it up. One key event next week could bring a new round of volatility to the gold market and help prices recover following 2 consecutive weeks of losses, according to analysts. But you know what? It could move the other way too. Just depends on how that meeting turns out. But there's something more to this meeting that meets the eye, and something that I've been talking about for quite some time. This could be one of those things, one of very few or very many of these meetings that are finally coming into the public eye. A stronger U.S. dollar is keeping gold under pressure for the time being, as markets remain somewhat confused by the Federal Reserve's mixed messages. The primary driver for this week's sell-off was the market's reaction to the Fed minutes, said Kitco Metals Global Trading Director Peter Hugg. Strength in the U.S. dollar caused the metals to sell off. The dollar has now stabilized and the metals found the bottom, reversing from overnight weakness. The markets were waiting for the U.S. government to generate some fiscal stimulus to keep the economy going. However, with the hiatus until September, it doesn't look like relief is coming, noted Hugg. People get nervous and moved into cash. The U.S. dollar reversed almost 2%. And there you go. And that bolsters my case about the dollar. I posted a video about the dollar, a relatively controversial video and stance about the dollar. Is it trash and is it money? And I think this proves and we've seen this with other downturns where people, move to the safe haven of cash, and sometimes that is to be noted and to be recognized in the community. After briefly falling below $1,920 an ounce, December COMEX gold futures have stabilized on $1,943.80. That $1,920 was the prior record that we saw for gold in 2011. And it did briefly take that note to fall below that level. But you think about it, that's still record high. Gold is up there, and it is holding its own, all things considered, even with these pullbacks. That was down about 0.14% on the day and down 0.31% on the week. The U.S. dollar index climbed to 93.35 at the time of of this writing, rising 0.60% on the day. The dip on the gold price appears to be related to investor selling, most likely to be some profit taking and some strength in the U.S. dollar in recent days, Capital Economics chief commodities economist Caroline Bain told Kitco News on Friday. So here is this event, and it's the Jackson Hole Symposium. You've heard me talk about Jackson Hole. That's where the Federal Reserve meets to discuss monetary policy. The markets will hear more from central bankers next week during the annual Jackson Hole Symposium, which is being held virtually this year. This year's event is titled Navigating the Decade Ahead, Implications for Monetary Policy. And Fed Chair Jerome Powell is scheduled to speak on August the 27th at 9:10 a.m. Eastern Time. So that's pretty early there if it's in Wyoming. Whenever the Fed chairman speaks, there is significant volatility. what the market is looking to see, whether Powell is worried and what his new view on the economy 3 months from now is. If he shows any sign of concern, that could create significant volatility, Hug said. When you have an event like that, a lot of people tend to reduce their positions, whether long or short. Gold's wild ride will continue next week, said RBC Wealth Management Managing Director George Jarrow, noting that Powell's speech next week will be one of the most significant events to watch. People are going to hold back on trading until they can digest the Fed's message, Jarrow said. Markets will be carefully watching any communication regarding the Fed's monetary policy review, said Pepperstone head of research Chris Weston. The Fed communication team have said that Powell will outline the findings of the review on monetary policy. So this could be a multi-asset volatility event risk, with the market somewhat disappointed by the lack of urgency expressed in the FOMC minutes. This could be a more important event, and it will be a risk for anyone holding the U.S. dollar, gold, and NAS 100 exposures, Weston said on Friday. In other central bank news, a group of former Fed officials wrote an open letter in opposition to U.S. President Donald Trump's Fed nominee Judy Shelton, who is pro-gold, by the way. We urge the Senate to reject this nomination. Ms. Shelton's views are so extreme and ill-considered as to be an unnecessary distraction from the task at hand, said the letter, which was signed by 38 individuals, including former Vice Chairman Alan Blinder. Well, doesn't that say something? Because obviously Alan has his blinders on when it comes to gold. But Ms. Shelton's obviously is someone who holds views that are antithetical to many in the Federal Reserve. Shelton's Fed nomination was passed by the Senate Banking Committee in July and now needs to be approved by the full Senate. No date for the vote has been scheduled yet. And so it'll be all about next week, said Peter Hugg. If gold can hold the $1,925 an ounce by Friday's close and the U.S. dollar remains steady, then I am bullish on the metal next week. The overall trend has not changed in gold, Hugg added, noting that people are nervous right now because they have profits on the table. Lots of investors got underneath $1,900 an ounce, so anything north of that area are profits. Investors are taking some of it off the table and moving it into cash, he pointed out. Gold, going forward, Hugg expects high volatility levels throughout the fall. The U.S. dollar strength is unlikely to continue for much longer, said Bain, adding that she is optimistic on gold in the medium term. We expect that gold price to rise a little in the coming months as we expect a further leg down in real U.S. yields and a somewhat weaker U.S. dollar. Persistent uncertainty over the economic outlook owing to the ebbs and flows of the virus is also likely to encourage investors to retain some gold holdings, Bain pointed out. And I think that's just it. You have this push and pull between the dollar and gold as in terms of what people feel are a better holding in times of crisis, at least to some extent. But obviously gold's price speaks volumes right now as being the ultimate hedge. Silver is still riding the coattails of gold and is even more volatile in this environment for sure. Gold's losses in the last 2 weeks are not as significant because the fundamentals remain bullish for gold, and I agree with that, which is from FXTM senior researcher analyst Lukman Otunuga. Rebound is potentially on the cards. A broader, weaker dollar, negative U.S. yields, pre-election jitters, and rising coronavirus cases in the United States are likely to keep gold shining in the medium to long term, Otunuga said. The $1,900 level was a very strong support built in, and even if gold falls at that level, there's plenty of investors interested in to buy at that level, including me. Sustained weakness below the 1960 level may open a path towards 1930 in the short term. If 1,930 proves to be unreliable support, then prices may sink towards the psychological level of $1,900 level before bulls try to re-enter the scene, Otanuga said. Commerce Bank analyst Karsten Fritsch highlighted the 2011 high of $1,920 as key support or area, but warned that a drop below it could postpone the recovery. Gold has established an important support level for itself, which also lies close to its old record high of 2011. Many stop-loss orders are likely to be placed below it, so it will be important to maintain this support area. Otherwise, the correction could drag on significantly longer. This could also prompt ETF investors to sell their holdings, Fritsch said. Next week will be data heavy, so a lot going on next week, and as well as that meeting with the updated U.S. Second quarter GDP numbers out on Thursday. For the second quarter GDP releases next week will further reveal the extent of the damage from the last 2 months. The second stage recovery is now underway, so don't expect continuation of the rapid rebound, ING economist said on Friday. Other key U.S. data publications to keep a close eye on include CB consumer confidence and new home sales on Tuesday. For all what I've heard, the real estate market generally has not slowed down a whole lot. In fact, some don't even see much of a hiccup at all in new home sales. You think about it, with all this cash flowing around, it only makes sense. I mean, you're seeing that consumer spending is up all around, everywhere, for the most part. It's hardly like anything has occurred. Unemployment is obviously a big deal, but when people are getting more than what they were earning at their jobs, it's really not that big of a deal. And then we have jobless claims and pending home sales on Thursday, as well as personal income on Friday. And so it's very, very interesting to see there. But this is what we got to worry about here. Look at those 3 6s for the U.S. national debt, and it probably won't be long before see these numbers tick up again. Actually, there's 1, 2, 3, 4, 5. There's 2 6s on the book ending, the 3 6s in the middle there, and this number keeps climbing at astronomical levels. No end in sight for the debt in the United States of America, and deficit spending out of control all the way around. And so it is something to behold here, and this will continue. This what has me concerned when we talk about this event, this meeting by the Federal Reserve and what they're doing, because every time they meet, there's got to be a portion of that meeting where they're discussing the potential collapse of the dollar. And I know I'm not a doom and gloomer by any stretch, but when you think about what the dollar, how much can they stretch that dollar in terms of printing it out to where it's going to be a major concern, to where these gold coins that you see before you are going to replace them in terms of their value. They already are. I mean, in terms of dollar value for these things, and gold is way up there in price. And so, the government issued gold coins from the United States Mint. No, we have a lot more faith in them than we do the money, the currency being printed these days. And, so, I did talk about the dollar and made an argument that it is money, but it's only very loosely that it is money. It's a very fragile money, whereas this gold that you see before you is durable money. Yes, indeed. And it's not by the denomination, which is stamped on the back of these, $50. No, indeed. It is the gold content that is contained therein, backed by the full faith and credit of the United States government for the gold content as well as the dollar amount on them. Silver, well, silver will continue to impress us, I believe, in the coming days and weeks, as it will follow gold. But I believe there will be many of us that will be frustrated as the gold to silver ratio will continue to be above normal levels in times like this, when the ratio should be really narrowing closer to 35 or 30. It may be a while before we get to it, to see this shiny white metal make that movement in that direction. And nonetheless, both gold and silver are continuing to do what they do best, and they provide themselves as a hedge against economic instability and it's showing itself with increased physical demand, which I talked about in a previous video as well, because the dollar is what it is, and it's fragile right now, but it does have value, and that's why we're seeing some people take these profits for these, and why we're seeing some of the gold and silver prices go down a little bit, but not by a whole lot, really. You think about it, $26 silver, 4 months ago, we wouldn't think it would happen this year. I was still saying, well, we might see $20 by the end of the year. Well, look at that. We've far surpassed that. And anyone can make the argument, I think, a cogent argument, that we probably won't see $20 silver again through this crisis by the end of the year. So there you have it. Interesting and fascinating indeed. There's where we stand with the precious metals and this meeting that is going to be taking place next week. The symposium. What about this decade ahead? What will Jerome Powell say? It'll be fascinating indeed. Post your thoughts below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.